All right, let's jump right in. Welcome back to another stream. I got some action going on in the market, so without further ado, let's just dive right in and start looking at this. First things first, looking at Ethereum. We've been kind of tracking this range for a little bit now. And the main thing that I've been looking for is a sweep of the highs, basically. Probably move that over. It's probably going to be a little later at this point. But so we formed this range end of September. Came up. We've left highs untapped up here, as well as we left lows untapped, leading up to eventually taking them all in one clean sweep. Took those, reclaimed the range back to the mid range, and we've been pretty much moving sideways from there. Now we've seemed to flip the mid range. So I do think we have a strong chance of coming up and taking these highs, 1385. We've got highs at 1399 and ultimately 1412 is our range high. So I think there's a good chance if we can trigger one of these, it's going to cascade and turn into a full sweep of all three, similar to how it did here. You can notice once we started to take this low here, 1261, we also took this, we also took this, we also took this. It cascades, and all the forced selling turned into a much deeper dip than probably what would have happened if there were no margin positions involved. So I'm expecting something similar to that here on ETH. But just going to the weekly, kind of two levels that I'm looking at, right? Marked here, weekly open and weekly support. I would anticipate this being the support. It would come down a bit late on that now. It seems like it's already happened, but here we are. We do this live, so the chart was from earlier. But certainly a chance we come back down there. We should mark this as our OB here for our sort of local demand zone, and potentially another one here, although I think that one's less likely, but one of those things, if it does come, I think you take that long. So last week we closed with a bullish engulfing. Nice looking candle. My only concern with that is the majority, possibly all of this upside came during the weekend, which I think it sort of explains why we're seeing ETH down 1.4%, where SPX is actually up 1.4%. I think it's just kind of the market balancing itself out, because lately we've been tracking the stock market so closely. I don't think the powers that be, or whatever you want to think of it as, wants ETH to start running away without the stock market. So it's going to kind of create a symbiotic relationship here, right? Where ETH is going to sell back down to kind of catch up with where the stock market was, and then they can move together. That sort of is the reason for the saying you might see on crypto Twitter and stuff like that, like don't trust a weekend pump. It's kind of just the kids playing while mom's away, and mom wakes up Monday morning and chooses violence. And that's sort of what we saw this morning. But going back to the 4 hour, so we did get that pullback, front ran that by a little bit. I'm sure some exchanges it hit. So now what we're looking for basically is you want to be getting longs in this weekly demand zone. And I think we need to break this weekly open, right? This weekly turns green. It can move quickly. It can take this liquidity, this liquidity, this liquidity. That can turn into a sharp move, right? So first things first, break that. That happens. You're not far from this liquidity up here. So you break that. That drives us here. And the third liquidity sweep sort of drives us here. So I think ultimately we end up somewhere around 14.12, all the way up to 1430, somewhere in that area, depending on how much momentum it can gain and how much how many shorts are needing to close if that is the case. So that's sort of what I've been looking at lately for Ethereum. We can jump over because SPX actually is interesting here, right? I'll put these EMAs on real quick, just in case you didn't see the last video. I can't remember if I did it during the recording or during sort of our chat after the stream. Basically, the S&P has fallen below this 200 weekly EMA 2 times previously. This would be the 3rd time. And if we look at what happens each time, and of course this is an up-only market for years and years, so it's not exactly obscure or weird that this happens, but this is what happens, and this is sort of a pattern that we can recognize. You fall below the 200, you break the previous high. Okay? Come up here, set a high, you fall below the 200, we break the previous high. So now if that's to repeat, we fell below the 200, we're back above it, that's a sign of strength. We would look to break the previous high, meaning we break 4790, call it 4800, and you start to get a rally. Now obviously the macro as it's called, is not favorable for this to happen, but I would argue, we're kind of in unprecedented times for this, so I don't want to make predictions based on, the macro or whatever is going on. But we had a rally after COVID. Obviously, a huge part of that was the QE. And now we're seeing the opposite, where we're tightening the money supply. Fed is offloading their balance sheet, and the interest rates are going up. They're trying to correct this market. They're trying to correct the inflation. But I think it's possible in the next couple of months. I would think next month in particular, heading into midterms, that the Fed might take their foot off the gas a bit. Not to say that they won't increase the rate again, but they might increase it by less. So now we've seen 0.75 or 75 basis points at every rate hike. We might see that come down to 0.5 or 50 basis points, which would kind of indicate to the market that the Fed is letting up a little bit, being not quite so hawkish, but I think that is sort of what this rally is about right now. I think people are starting to anticipate that. And if that happens, like I said, that's kind of a signal to the market that they're taking their foot off the gas a little bit. That they want a healthy market for midterms if they want to keep their elected officials. It's easier to run in a healthy market than it is in a bear market. So yeah, that's what I'm looking at with the S&P. We can jump over to Bitcoin real quick. Drop this down. Let's zoom in. Okay. So obviously this didn't play out how we were anticipating. Let's just clean that up. But similar to ETH, not quite as good looking. We're getting more of this coiling action here. I like the structure on ETH better. That's why I'm sort of looking to trade that more than I am Bitcoin right now. But I mean, you do have the EMA is acting as your support right now, and it looks like we're trying to maybe get a bullish cross of the EMAs here, which obviously could lead to some upside. And I think mainly we want to be paying attention to SPX, and personally I'm going to pay more attention to Ethereum. I think it's just more interesting to trade right now. But yeah, not too much to say about Bitcoin here. Obviously we can mark out some levels. This is your local high. So that's sort of your trigger area where you're looking to break to eventually come and take some of these highs that have not been taken yet. So for if what we think it could happen with Ethereum happens, that would roughly translate to Bitcoin getting to about 20.5, 20.4 to take the same liquidity, stop out the shorts. All right, don't want to make this too long, so let's just take a quick look at ETH BTC. Okay, and ETH BTC is looking strong. We came down to this level we had talked about. Basically, we said, if we lose this level, then we're looking lower. We hold this level, we're looking to come back up here to sort of 0.075. It seems like that's what's happening. You got this cross happening. You got positive market structure. Again, supporting why I would prefer to be trading Ethereum right now. So yeah, I think that's probably it. Stop this here, and I'll see you next week.